Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to Discovery Watch, John.
Jim, glad to be back.
John, InZinc Mining reported final results for its Indy drill program, which failed to lift the stock out of the sink. Is the Indy zinc play finished? Toast, gone?
Well, the market was hoping for that when they put out the first batch on November 1st for the Indy program. There were 10 holes that they drilled. They were fairly shallow hole. It was a $600,000 program. But the market is still not impressed by the latest results, which are indeed better grades. What seems to have happened is this is an old Cominco project, and in this area, anomaly B, it's a soil geochemical anomaly. Cominco had drilled several holes, and it got sort of 4 or 5% combined zinc lead out of that hole back in 1989-90, and Kerry Curtis was involved with Cominco back then, and so this was kind of his favorite project, and he in fact is the vendor. But it is an early stage project, grassroots you might say, though they believe they have now elevated it to discovery stage, and they doubled the land position to about 11,000 hectares to cover the projected stratigraphy of this play. And what has them excited is that these holes that they drilled, they believe they have intersected the veins that are part of a feeder system for a vent of a classic sedimentary exhalative type of system. And there's one to the north in the Kachika Trough where Teck has the Cirque deposit, where ZincX Resources has the AKIE deposit, and there's several more up there. But the Indy location is, from an infrastructure perspective, much better for future development. So their plan now is to return to this project next year and do a similar scale $600,000 drill program to start chasing around in the vicinity of the key hole. I think it was number 9 or something like that, which got the better, up there in that 5 to 10% zinc lead grade that you want to see. And that did not really impress the market, because the market has really been focused on the West Desert project, for which PEA was completed in 2014, and the $3.5 million that was raised in late 2017, most of that went into a drill program that wrapped up in August, I believe, of this year, and that program resulted in both good and bad news. And the bad news was that the deep step-out drilling to the east, which was basically wildcat chasing a very high-grade intersection that was never explained. Not only did that hole come up empty, but what it revealed about the geology in that location suggested that it's probably not worth spending any more money in that area. The good news to come out of that program was that when they stepped to the west of the deposit and drilled in an area where there wasn't supposed to be anything, there turned out to be good sulfide mineralization, which is, it's still going to be underground mineable, but it's closer to surface, and that needs to be followed up. But the company will only have about $1 million left at the start of 2019 after it gets back the $200,000 kickback that the BC government does for exploration work, and they know that they need a more serious program for West Desert. So it seems to be that West Desert for now is finished because the stock is at a nickel. It has 108 million shares out there. There's 17 or so million warrants at 15 cents that are good for another couple years that basically represent a lid. The company does not want to finance at these levels. So they are taking the stance, okay, next year we focus on demonstrating that we have a district SEDEX zinc lead silver play on our hands in the Indy area, which means going back in there with a lot of shallow holes rather than the deeper 300 to 400 meter holes, and therefore expensive holes that will be required for expanding West Desert. and the market really doesn't want to hear about that. So yes, the InZinc is in the sink, but the Indy play is not finished. The West Desert play is stalled. The one hope that speculators hoping for some rapid gratification have is that the company did go through with its threat to stake some claims in somewhere to the west of West Desert in Utah to cover a target area. They are currently doing an IP survey over that, and if they get an IP chargeability anomaly indicating that there's sulfides associated with the geochem and the magnetic anomaly, then they will actually tell us that they have this project and let us get perhaps excited that there might be a focus during 2019 in the Utah, in the West Desert area. But until we hear that, that's just something. If there's no IP anomaly, they'll just let those claims lapse and let it die. They're very concerned that people get overly excited about the company, and well, that's also evident in the stock price. The focus on Indy is interesting because the website still only has an April presentation on it, and the Indy section is still saying coming soon, even though they've been focused on this project for all year. So the market's also bummed out about what seems to be a fairly lackadaisical attitude in management towards its audience. And I have to admit, it does seem like they're of this view that if you deliver a big discovery, the audience will come. And while that is true, that's not how the junior space works. So unfortunately, InZinc mining is going to be stuck in the sink for a while, and maybe in the second quarter of next year when they get going, maybe we'll have a better resource market. Maybe zinc prices will be strong again, and maybe they will start finding the exhalative part of the SEDEX system and start demonstrating that there are shallow, good grade, 5 to 10% zinc, lead, silver pies to be drilled off in that area. And that could bring that project to life because that location is good. But right now all the drilling is focused in one little area in Anomaly B. They have several more geochemical anomalies, some of which have better soil geochem. And they believe that the key achievement this year was that they can use soil geochem as a targeting tool. So maybe, got my fingers crossed, maybe we'll see a proper discovery play start to unfold next year in the Indy area.
We'll have more with John Kaiser right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back to Discovery Watch. John, Serengeti Resources announced additional drill results for its Quanica project yesterday. The stock dropped nearly 50%. What's the deal with that?
That market reaction seems to be unrelated to those results, which consisted of 5 more holes from the 14-hole summer drill program they did this year, following the release of 3 holes on October 18th. Now, that first release seems to have caught the market by surprise because the stock had drifted all year in the sort of 13 to 17 cents range, and when the news came out, it traded as high as 60 cents on pretty heavy volume, over 10 million shares, before it settled back to 35 cents when the market realized that, this was not a new discovery hole like the North Saddle of GT Gold, where you can dream about how big and good it might yet become. This was an existing deposit. And then it came under pressure in the week after that when Inca Kola, which is a website whose operator is based in Lima, Peru, and loves to trash companies he doesn't like, came out and claimed that this hole was actually a twinned hole drilled in a worthless project to pump up the market and enable somebody to blow off paper. And that wasn't really what this project was about at all. I published a overview that put this whole project into this program into context on October 26th, and argued that it was rather unfair of Inca Kola to insinuate that this was a meaningless hole drilled just to goose the market. The project it is true that at the current copper and gold prices, the Quanica project, as outlined in the PEA, does not clear key development hurdles, one of which is that the after-tax net present value should match or exceed the capital cost, using some discount rate better than the 5% everybody uses to try and make marginal projects look good. And the internal rate of return needs to be 15% or higher. And at the current metal prices, that really isn't the case with Quanica. It is, however, close. And that's the reason POSCO Daewoo, the South Korean conglomerate, is earning 35% by putting up the money for this pre-feasibility study. And this program, it's geared towards supporting a pre-feasibility study expected by July of next year. And both the POSCO team and Serengeti's team designed this program. So this is not some bogus junior thing where some promoters concoct a drill hole to come up with predictably exciting results and see if they can trick the market into hijacking the stock and allowing somebody to lose paper. There is actually a point to the way this program has been learned out. And the first of two goals is that they would like to expand the number of years that the Quanica project is open pit mined from 2 to as much as 5. And the reason for doing this is that the underground development work is CapEx. And if they can push that farther out into the future, then that will improve the net present value and the internal rate of return and help the project clear those development hurdles. And so they've got a number of holes centered in the middle of the deposit, fairly shallow holes radiating out towards the edges, which are designed to better understand the pit limits and help them expand the open pit mining portion of this project. But that's not what the initial hole was all about. The second goal of this program is to test the hypothesis that the earlier drilling, which was oriented more in an east-west direction, fails to properly capture the gold mineralization, which appears to have a domain of more east-west oriented veinlets and fractures, which you want to drill something like that perpendicular. So half of this program's holes are holes drilled in a north-south direction, designed to intersect the underground boot for this deposit, and also test the middle part. And that initial hole that we got several weeks ago, it confirmed that this is shaping up. And the hope is that when they deliver a new resource estimate in the first quarter of next year, one, there is a larger open pitable portion that allows them to expand the open pit mining portion for the mill capacity, and the second is that there is a better grade, which, in combination with the the longer open pit life, will increase the NPV and the IRR. And the results that came out on Tuesday were basically in line with these expectations. So the market reaction really makes no sense, especially since the stock in the prior 2 days had gained almost 9 cents to 48 cents, which was suggesting that the market's come to terms with this story. This is not a new discovery story. It is an advancing or making better an existing story. So what happened? And it's interesting when you review the trading that took place. Right on the open, TD Securities bashed out 50,000 shares, down 9.5 cents. And TD Securities is a very active trader on the venture exchange. If there's any entity out there that involves algo traders, it will certainly be TD Securities. And one can even speculate that they may not even have owned those 50,000 shares, because with these wonderful rules that the Canadian establishment banks inflicted on the venture exchange, you can now sell short on a downtick if you're a day trading company. And so in essence, this initial trade set the stage. 10 minutes later, somebody at BMO woke up and pounded out 100,000 shares. And BMO, over the course of the day, of the 10 million shares that traded, hit the market repeatedly with large batches of stock, up to 3.7 million shares. And even today, the stock is a few cents lower. They've sold another million shares. And as this was going on, RBC suddenly kicks in and starts selling large positions, and Questrade, which is a discount broker. So we have at least 3 distinct investors who have started to sell, even though the news was not different from what anybody should have expected. And so you wonder what is going on. Now, when one party sells, such as BMO, there can be any manner of reasons. It could be an estate finally liquidating a position. It could be a divorce that's happening that results in liquidating the assets, or somebody got bad health news and decided to go out. And if it's an institutional shareholder, it could be that the fund manager left or got fired, and his or her replacement comes in and says, we got to get rid of all this riskier stuff, get it out of here so that I don't get the blame for whatever happens with this. So there's all manner of these reasons. But what's interesting is there could even have been the reason that the BMO shareholder was extremely confused about what this all was, and was a real dummy who waded into the market and bought all the stock thinking they have another major new discovery on their hands. But when you do the house summaries all the way back to the beginning of the year, they were not big buyers in the first part of the year. They were not really big buyers when that October 18th news came out. So it looks like a longer-term shareholder. It's unlikely that BMO is jitneying for somebody else, trying to make BMO look like the villain in all this. So I would say it's probably a case of a longer-term shareholder who, when the stock opened down as a result of that TD selling, it painted the tape with the trend, and they just capitulated. And we have seen the trading values shrink. In the past week, not counting Monday, which was predictably low, trading value has shrunk as low as $14 million on the venture exchange for the resource stocks. And it's been holding in the $20 to $25 million range, occasionally spiking up to $30 million when one company does a whole lot of volume. But it has been fading away, and of course we've now seen the cannabis stocks come under pressure too in the last while, and we've seen the rockiness in the bigger markets. So people are starting to look at this junior resource sector and say, is this thing terminally ill? Is what everybody was wringing their hands about in 2015 back on the front burner, and that the Canadian institution of a resource junior sector is terminally ill and is going to die? And so that's why you see these events where capitulation selling that may have nothing to do with the fundamentals, just sort of broad despair about the direction of the resource sector. And we are now heading into the 8th year of a bear market that began in 2011. And of course, it's interesting. We'll see shortly if I'm being told the truth that insiders of Serengeti were buying stock in the open market in the mid-20s and yesterday, which means, of course, they've already lost money on paper because it's a few cents lower. But the investors, as a broad group, they're just starting to give up on this space, and this could be what it takes to really get ready for a turnaround in the new year. And I'm preparing for this. I'm going to clean out all my existing spec value and bottom fish candidates and then replace them with a new batch, which I'm going to start making available in December, and set up for what I think is actually going to be a surprisingly better year than you would conclude from the way the market is behaving right now.
We'll have more with John Kaiser right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
We're chatting with John Kaiser. John, Sun Metals published additional results for hole 421 from the Stardust project today, and the stock did go up. What's new about hole 421?
Well, Sun Metals managed to trade 9.6 million shares today, close up 5.5 cents at 33 cents, and that's just short of the 35-cent warrant overhang that they're going to have to chew through. What they reported was the additional mineralized portions of hole 421. And what's interesting is they reported it as 100 meters, grading 2.5% copper, 3 grams gold, 52 grams silver, and 0.41% zinc, starting at 517 meters to 617 meters. But there's two additional sections in it, and they published enough subsections in it that you can actually calculate, and the company's probably going to get some accusations of grade smearing to come up with this 100 meter interval, because the first 23 meters that they added to the initial intersection that they reported several weeks ago, it grades about just under 0.5% copper. And then the just shy of 12 meters between the two mineralized zone, it grades 0.006% or 0.006% copper. So that's not a very, very good interval at all. That's basically a semi-barren portion between the two zones. The original one was 36.5 meters of 3.9% copper. The exciting part about today's news release, if you ignore this longer interval, which I don't think really should have been done without reporting all the sub-intervals, was between 588 and 617 meters. There was 29 meters of 3.35% copper and 4.3 gram gold and 66 gram silver, and only 0.06% zinc. And the low zinc caused one geologist to throw up his hands and say, I think I have to go back to visual eyeball school because I clearly can't tell the difference between sphalerite and chalcopyrite or whatever it is that the copper sulfide is in this. Now, when you look at the section in this, what's really interesting is that the 3 million tons of lenses that have been outlined over a 10-year period and for which a resource estimate was published last year. That's all in these Cherty phyllites higher up. This hole is completely in limestone. And limestone is the preferred host for developing carbonate replacement style mineralization. So while there's only one hole and the geometry of what's going on here is not understood, we have a very rich interval, and it's unlikely that they've managed to tag something on the end and gotten a down dip interval. And this is we've talked about it before, that this is a game changer for this project, and clearly drilling more deep holes into this area needs to be done. And because of a hole that they drilled this year, it shows that, yes, when you go beyond a certain depth and what may be a possible fault, you get into these limestones. And so there appears to be lots of running room for stepping out and finding a lot more of this. And as Peter McGaugh in that video they published a couple of weeks ago argued that even the textures of the mineralization here suggests you're still not at the heart of the CRD system where you get the best grades. So the market is right to be excited about that. I don't think the company needed to stretch it into 100 meters of 2.5%. These two intervals between 3 and 4%, those are very important. It's higher grade than we've ever seen, and getting this extra 29 meters at depth for the Stardust project, that is a big bonus for expectations when they return to this project in late April or early May. So good news from these the extension of this hole, and we still have a few holes from other targets. There are no visuals that I've heard that come remotely close to this, but the Stardust project is shaping up as a major discovery focus for 2019.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.